Oh, can you hear me, bro? Yeah. Okay. Like if you could speak a little louder, it would be great. I can't hear you clearly. Okay. Yeah, like a little more louder, maybe. Okay. Ah, yeah. Now it's fine. Okay. And can you see my screen? Yeah.
Yes.
Okay. And you can record if you want to.
Okay, sure.
Mhm. Okay.
And bro, one more thing I
Yeah.
have to say.
Okay.
My English will be a little bit worse, so I
No
have to
problem,
manage
bro.
it somehow.
Yeah, yeah. Don't worry about that. Don't worry about that. Okay.
Why?
Yeah, you can start
When it
recording,
comes
bro.
to
Because
typing,
yeah.
it will be okay for me.
Okay.
But when it comes to speaking, it's a little bit worse.
No problem.
Okay, okay.
Okay. So did you start recording? Let's get started.
Yes, bro.
Okay. Yeah, because I won't be recording it. So if you record it, you can get it, or else you won't get a recording. Okay.
Okay.
Okay. Then let's get started. So you know the basic smart money stuff, right?
Yeah.
What order blocks are, what liquidities, imbalances, and stuff. Yeah.
Yes, yes.
Okay. So now let's get started with this. Now, do you know about the strong highs and the strong lows, and the weak highs and the weak lows? Yeah.
Yeah.
Yeah. Now, for us to consider it as strong high, price has to do this. It has to take out liquidity from a previous high and then break structure. Simple. Okay, it has to do a run on stops and then break structure. So if this happens, this high will be considered as a strong high. Okay, that high will be considered as strong high. And same thing, for it to be a strong low, price has to do this. Okay, it has to take out liquidity from a previous low and then it has to give you a breakout structure like this.
Yes.
Okay, so if that happens, this will be considered as a strong low. Okay, that will be considered as strong low. Now, what happens in the market is something like this. Now, for now, I'll just draw this out to you, and later let's get into charts. Okay,
Okay.
yeah. Now, this is what happens in the market. So let's say we had a stop hunt, a breakout structure. Price might retrace and then give you another breakout structure like this. Okay, might give you another breakout structure. So now you can see price is clearly in a downtrend, right? Creating lower highs and lower lows. So if someone wants to re-enter the market, what would they expect? A lower high and a lower low, right? This is what anyone would expect. Okay, this
Recording
is
in
what,
progress.
yeah, this is what anyone would expect, right? A lower high and a lower low. So first thing, smart money traders, what would they do? They might look for a point of interest in these areas, set their limits here, stop losses above these highs, targeting lower prices, right? This is what the smart money traders would do. And even supply and demand traders, because this is what they call a rally based drop. So they might call this a supply zone and then set their limits here once again, stop losses above these highs, targeting lower prices. Okay, this is what they would do too. But then again, not only the smart money and supply and demand traders wants to enter the market here. Okay, we have trend line traders. Okay, we have trend line traders. What they would do is they'll wait until the third touch into the trend line like this, and then stop losses above these highs, targeting lower prices once again. This is what they would do, right? This is what they would do. They will expect a move like this or something like that. Okay, so this is what they would do. And then again, we have break and retest traders. Okay, break and retest traders. What they would do is, like, what are the confirmations they use? Something like a bearish engulfing candle, right? Once they find out a bearish engulfing candle, they will sell this thing, stop loss above these highs, targeting lower prices once again. This is what they would do. Same thing, we have broken support turning into resistance. We have SNR liquidity. Okay, a broken support turning into resistance. What they would do is once they find out, yeah, once again, once they find out a bearish engulfing candle, they're going to sell this thing, stop loss once again above that high, right? Once again above that high. Then we have breakout traders. Because why? What have the breakout traders been taught? So if price breaks structure, if it retraces and gives you another breakout structure, the breakout traders are going to have their buy stops above this high. Okay, buy stops are going to be placed above this high because the reason is anyone knows that if something like this happens, it's going to be a breakout structure, right? It's going to be a breakout structure. So the
Right.
breakout traders, what they do is now, since they want an early entry, they're having their buy stops here because they know that in case if that happens, price can keep going higher. Okay, so that's the thing. Now this right here, now let's look at this. Okay, how much of liquidity is resting above this high right here? A lot, right? all types of all types of traders are trapped above this high, right? All types of traders are trapped above this high, like the yeah, 90% of the retail stop losses are right above that high. See that? Right above that high. So like if we call ourselves smart money traders, and if we do something like this, we're just adding into that pool of liquidity, right? Our stop loss is also with that liquidity. So you can't do that. So if you're a smart money trader, you have to be thinking like thinking like the smart money entities. Now, what are the intentions of the smart money? Is to take out the retail stop losses, right? Is to take out the retail stop losses. So where are the retail stop losses now? Right above that high. Right above that high. So knowing that, you're not going to sell it here. You're going to look for something above that. Okay? You're going to look for
So you are
something
saying
above that.
that
Yeah,
this will become an inducement, but it's
exactly.
not a valid structure high, right?
It is not a very structural high. Okay, it is not a structural high. Now once we get into charts, I'll show you why it's not a structural high. Okay, yeah. Now people are induced into believing that this high right here is a break of structure point. See that? Inducements. People are induced into believing that this right here is a break of structure point, and another set of people are induced into selling from these areas, right? Selling from these areas. Now, like, that's the thing. Okay, the inducements, those are the things that matter the most. Okay, those are the things that matter the most. Now price might come up, and in these areas you might get good reactions. Why would they do that? Okay, only to like get you hyped up, nothing else. Because you know how we get the confirmation entries, right? Now when price taps into this point of interest, you might even get something like this on a lower time frame, a lower time frame breakout structure.
Yeah.
When price taps here, why are they doing that? Building up more and more liquidity. Now then what people would do is increase their risk and then reduce their stop loss on a lower time frame point of interest like this, right? Because why? The trade is confirmed after the breakout structure. So they might have their stop loss above these highs now, having the same targets like this. Why? That way they can increase their risk to reward ratio, right? Okay, so this is what they would do. And then again, some people might look at this as a trend line forming. Okay, some people might look at this as a trend line forming, and surprisingly, all of these areas will get respected for a while. Why would they do that? Building up more and more liquidity. See that?
Yeah.
More and more liquidity is getting built up. This is what we call engineered liquidity. Okay, engineered liquidity. And then what happens? All of a sudden, bam, will go straight through it, and all of the sellers will get stopped out. Okay, all of these sellers will get stopped out. And then what we should understand is that if they want to go lower, they're going to induce buyers into the market first. Okay, they're going to induce buyers into the market first. Now look at this. Buyers are induced into the market in the form of buy stops. See that? Buy stops are activated now.
Yeah.
Because why are they doing that? Because only if there are buyers in the market, they will have their stop losses below a low, right? Can you understand it? Only if there are buyers in the market, the stop losses will be below a low. Now, what happened is now when price broke above this high, buy stops are activated, and then another set of people would look at this as a breakout structure, and they will expect moves like this, right? They will expect moves like this. So now, where are the stop losses placed? Right below this low, right? Right below that low. Can you understand it? Like they might look for order blocks or something from these areas, set their buy limits here, stop losses below these lows, targeting higher prices. This is what people would do, right? This is what people would do once they look at this as a breakout structure point. Now they will be expecting moves like this. Okay, so this is what they would expect. So that's the thing. This high right is what we call a major inducement. Because why? Like when it was here, a lot of stop losses were getting built up above that high, but when it broke, now where are the stop losses? Right below this low, right? Right below that low. So with this high right here, what they did was they built a cause for lower prices. Now they have a reason to do this. See that? Now they have a reason to run below these lows. Okay. So now, yeah, price can go up. It will sweep all of these stop losses, activate the buy stops, and then they will quickly push price back down. Okay. This move will be very quick. And in these areas, once again, you might get reactions. Why? building up more liquidity. Okay, more and more liquidity is getting built up, these fake trend lines forming and all of that, and then where everyone will get stopped out. Okay, so this is that entry you should always focus on getting. Entry above the liquidity. Okay, entry above the liquidity. So you can set it here. Stop loss. The safe place for your stop loss is always above the strong high. But if you do not like the risk to reward ratio, you can put it above the point of interest and then target lower prices like this. Okay, and now the reason I'm referring to this as a point of interest is because now this doesn't have to be an order block all the time. Okay, this could be an order block. Yeah, this could be an order block, or else this could be a breaker block, or else an imbalance close price section. Okay, anything. But what makes it high probable is the liquidity that is resting below it. Okay, that is the main thing. That is what makes it high probable. So can you understand it? Yeah.
Yeah, yeah.
Yeah, this is what happens in the market. Okay, builds up liquidity, takes it up.
Can you please explain what is a breaker block? Because
Ah,
I
yeah,
think
I'll
I
show
have
you.
heard about it later.
Okay, I'll show you. A breaker block is something like this. Now, this is the formation for a breaker block. Once again, something like this. Okay, something like this. So now this whole area would be an order block on a higher time frame, right? Last push up before the push down. See that?
Yeah,
Last push up before the push down. So this whole thing is an order block on a higher time frame, right? It's an order block on a higher time frame. So this push up started only to take out this liquidity, right? From this high. Okay, so there will always be a bearish candle here, the last push up before the push down. Okay, so you don't have to mark out this whole area. On a lower time frame, you can see a breaker block in this area. So I'll show you. Okay, there you can see a breaker block in these areas. Okay, so now keep in mind this is the formation of a bearish order block. I'm sorry, breaker block. Okay, this is the formation of a bearish breaker block, and you can expect moves like this,
okay.
like this. Okay, yeah.
Simply speaking, it's a supply becoming a demand or a demand becoming a supply.
Yeah, yeah, I did not learn a lot about supply and demand, but yeah, but it's more different. Okay, the breaker shows you where the money is actually. Okay, it's not a supply or demand zone. Okay, the ICT breaker, it never fails. Okay, the proper ICT breaker will never fail. Okay, so keep that in mind. And yeah, same thing for a bullish breaker block. So the bullish breaker block will be right here. Okay, the bullish breaker block will be right here where the structure got broken. Right here is where the structure got broken, right? So this is where the breaker will lie like this, and then you can expect moves like this. Okay, you can expect moves like this. Now, yeah, because it's just a higher time frame order block, but if you go to a lower time frame, it's gonna be a breaker block. Let me show you a good example. Yeah, maybe here. Okay, see this? This is an order block, right? Last push down before the push up. Okay, last push down before the push up, but what happened? Straight through it. Okay, straight through it, violated. Now, what's the formation I told you? Like this, right?
Yeah,
See that? So here is the breaker. Okay, here is the breaker, and where does price come into? Price will come back. Oh, shit. Okay, price will come back right into that, and then it drops. See that? It'll come right into the breaker. Okay, so that is what we call the breaker. Now, this whole thing right here is a higher time frame order block, right? Last push up before the push down. See that? If you go to the 4 hour, that's an order block. See that? Last push up before the push down, that's an order block. But if you go to a lower time frame, you can easily refine it to the breaker block like this. Okay, simple. Can you understand that? Yeah,
yeah.
that is the breaker. Okay, that right here. Now, this is the formation you need all the time: a stop hunt and then a break. Okay, so this is where the breaker is.
Someone
Okay,
even call it as a quasi model.
yeah, you can even call it as a Quasimodo. Okay, but yeah, now in Quasimodos, now this is the level they're expecting for price to return, right?
Yes.
Okay, something like this. But yeah, we're not expecting that. We're gonna expect the breaker. Okay, so yeah, now these Quasimodo, these QMLs, these imbalances, hidden bases, and all of that, if they line up in the same place, it's gonna be very high problem. Okay, like very, very high problem if all of them line up in the same place. Okay, but yeah, that's a bullish breaker. I'm sorry, a bearish breaker. And let me show you maybe a bullish breaker. Oh yeah, here. Mm, yeah, right here. See this thing? This is a this is an order block on the daily, right? Last push down before the push up. But if you go to the 4 hour, see this? What's that? A little breaker. See that? A little breaker block right here. Can you see that? So that becomes your point of interest. Okay, that becomes your point of interest. And where does price come into? Right into that, and it goes. See that? A little tap, and then it goes. Okay, so these high time frame order blocks are always lower time frame breaker blocks. Okay, so keep that in mind. So that's a bullish breaker, and this is a bearish breaker. Okay, so it's clear, right? I hope it's clear. Okay. So that's about the breakers, and you get this thing, right? I hope you understood this. Okay. Yeah. Then that was the first example, and this right here will be the second example. Now price can do something like this. So in that first example, I told you do not look for anything around here, but look for something above that, right? That's what I told you. That's what I told you. But then again, like why did I tell you that? Because a high probable point of interest will have liquidity resting below it. Okay, so now this is the point of interest that has liquidity resting below it, right? Not this, not this. Okay, this is the one that has liquidity resting below it. Okay, so what if on their way up they're doing something like this? You have to always pay attention to how price is pulling back towards your point of interest. Okay, because let's say on their way up they're doing this, they're moving up with compression, they're moving up with compression, and let's say they started building up some liquidity like this. Okay, right below this point of interest. Now what are we gonna do? Okay, I told you a high probable point of interest will have liquidity resting below it. Right now we do have liquidity resting, see that, equal highs resting below this point of interest. Okay, so now this will become a high probable point of interest too, right? See that? Now this will also become a high probable point of interest. Now price can do one of these two things. Okay, they can do something like this. They can come up, sweep this liquidity into this point of interest, and then drop. Okay, that can happen. That can happen. Why? Only because of this liquidity. Okay, only because of this liquidity. Or else they can do something like this. They can go up, give you a false reaction, then even build up more liquidity like this. Okay, they can build up more liquidity and then do this. See that? They can then do this. So this also can happen. So personally, what I would do is I will take this sell for sure. I will take this sell for sure, because what if you ignored this liquidity and you were waiting for this to get taken out and this to play out? But what if price comes here, sweeps this liquidity and then drops? You're missing out a good move, right? You're then missing out a good move. Okay, so personally, what I would do is I will take this sell for sure, because no one out there, okay, no one can guarantee you that price is going to play out of this order block or is this or something out here. No, no one can tell you that. All you can do is see where the liquidity is getting built up and look for the point of interest right above that. Okay, that is what we're going to do. So I will be willing to risk my money here, because like price can drop from here too because of this liquidity. Okay, so what I would do is I will sell it here, and as soon as it starts to give me a reaction, I'll move it to break even. Because why? It was anyway a high risk setup, right? It was a high risk setup because a lot of liquidity was resting above this too. So I'll just quickly move it to break even, because like this is what I would do. I'll move it to break even and I'll monitor price action in these areas. Okay, I'm gonna monitor price action in these areas and see if price is gonna break this counter trend. See that? See, look at this counter trend. Okay, I'll see if price is gonna break this counter trend. So if they break that counter trend, then we can expect moves like this, right? Then we can expect moves like this. But if it fails to break below this counter trend, like if it comes here and does something like this, then I know that price is gonna go up. Something like this can happen. Can you understand it? Okay, so you have to always, yeah, pay attention to how price is pulling back. Okay, and you have to be willing to take a risk in these types of scenarios. Okay, so this will be the second example. Can you understand that? Yeah. Okay.
So we always
Okay.
look for liquidity below a POI,
Exactly. Yeah, that is how we want to
if
see.
there is no
Okay.
liquidity, we are looking for the counter trend action with
Yeah.
help of a new liquidity, right?
Yeah. Now, if there is no liquidity, simply you're gonna wait until this gets taken out. Okay, now sometimes it can play off, but it is not high probable anyway. Okay, because remember, these
It's a
clear
defensive
order
move.
blocks are also, yeah, these clear order blocks are also sometimes, okay, now something like a smart money trap. Okay, something like a smart money trap, because smart money concepts are not something new, right? All of the retail traders are using smart money concepts now. Now, like order blocks are more famous than a trend line. Okay, so everyone will be looking to, yeah, everyone will be looking to enter from order blocks. So what if all of the order blocks play out? Then everyone will make money, right? So then how would the institutions make money? That's the thing. Okay, so that's the reason why they give you these fake order blocks all over the place. Okay, so you have to know which ones are high probable. So for that, you have to know where the liquidity is. Okay, you have to know where the liquidity is. Can you understand it? Yeah.
Yeah.
Okay, so this right here is the second example. And same thing, like, let me know if you have any doubts. Okay. Yeah. And this is a bullish market. Price can do something like this. So let's say we had a stop hunt. We had a break of structure and another break of structure here. So now you can see prices in an uptrend, right? Creating higher highs and higher lows. Okay, higher highs and higher lows. So now, what would anyone expect if they want to re-enter the market? A higher low and a higher high, right?
Yeah.
This is what anyone would expect. Okay, this is what anyone would expect. So smart money traders, what would they do? They might look for a point of interest from these areas. Okay, then set their buy limits here, stop losses below these lows, targeting higher prices, right?
Yeah.
This is what the smart money traders would do. Okay, this is what smart money traders would do. And same thing, supply and demand traders, what would they do? They might call this a drop-based rally, might mark this as their demand zone, and then set their buy limits here, stop loss below this low, targeting high prices, right? Once again, that is what they would do too. And same thing, now we're just entering off a break of an order block. Okay, but what are the other retail traders doing? They are entering the market here too. Okay, see, some people might look at this as a trend line, and they might wait for the third touch into the trend line, stop loss below that low, targeting high prices, right?
Yeah.
People will wait for moves like this to play out. Okay, this is what they would expect. So once again, stop losses are below this low. And then we have a broken resistance turning into support. Okay, so what they would do is once they find out a bullish engulfing candle, they'll buy it, stop loss below this low, once again targeting high prices. Okay, this is what they would do. And same thing, we have break and retest traders. Okay, break and retest. So same thing. Once they get their confirmation, they'll buy this with their stop loss again below that low. Okay, and then we have breakout traders, because why? If price breaks structure, if it retraces and gives you another breakout structure, the breakout traders are going to have their sell stops below this low. See that? Sell stops are gonna be below this low. Okay, so now look at this. How much of liquidity is resting below that low? A lot, right? So much of liquidity is resting below that low. So we cannot look for POIs from these areas. See that you can't look for a point of interest from these areas, because why? We know that this will get taken out because there is a lot of liquidity resting below it. Okay, and it was not a high probable point of interest, right? It was not a high probable point of interest. Like this, if you take it this way, this is not a high probable point of interest, because why? There is no liquidity resting above that. Okay, there is no liquidity resting above that. Okay, so what we are going to do is we're going to look for something below it, like this. Okay, we're going to look for something below it, and then let's wait until it gets taken out. So price might come back down, give you good reactions. Why? Only to like get you hyped up, and then might build up even more liquidity like this. So everyone will start buying this thing, fake trend lines forming and all of that. Then all of a sudden comes the right move like this. What are they doing? They're taking out all of the buyers, and then sellers will get induced into the market in the form of sell stops. And then another set of people would have looked at this as a breakout structure, and they will expect moves like this. Okay, so then the stop losses, like yeah, they would look for order blocks from these areas, set their limits here. Stop losses above these highs now, targeting lower prices. So we know that liquidity is what drives the market, right? Liquidity is what drives the market. So what did they do? They built liquidity above this high. So now they can do this. They have a reason to go above these highs. See that? They have a reason to go above those highs. So that is what they did. They built up some liquidity. Okay, so this is that entry we're always gonna get. Okay, like this entry above the liquid. I'm sorry, entry below the liquidity, like this, targeting this high, and this move will be very quick. Like you would have seen, most of the time I get tapped in with a wick. Okay, it just taps my entry with a wick and it goes. Okay, so that's the thing. For that, you have to know where the liquidity is. Okay, that is when you can get in with a wick. Okay, because we're getting in with the manipulation. Okay, and then price will quickly go up, and in these areas you might get reactions once again, like this. Okay, why? People would have wanted to sell from this area, so they will get all hyped up, and then bam. So everyone will get stopped out. So see, smart money traders, what happened to them? Wanted to buy here, stopped out. Wanted to sell here, stopped out. So then they'll be like, order blocks doesn't work anymore. No, order blocks, they do work, but you have to know where the liquidity is. Okay, that's the main thing. Can you understand that? Yeah.
Yeah.
Okay. Yeah, I hope this is clear. And let me show you a good example of this thing.
So,
Yeah,
how do
very
you
clear.
enter
Yeah.
in these kinds of areas? Will you
I'm
place your
sorry.
entry directly, or will you wait for a certain kind of confirmation types?
No, like most of the time, if my zone is too big, okay, like something like this, then I will wait for a confirmation. Because why? It's too big, right? I will not place my stop loss here anyway.
Yeah.
Okay, so if the zone is too big, I'll wait for a confirmation. Okay, like something like this on a lower time frame.
Okay.
Okay,
So
something
it's
like
like
this
a
on a,
change of character,
yeah,
break of structure, like that.
yeah, yeah, a breakout structure. Let's call it a breakout structure. Okay, this
A break
change
of
of character
character.
and those stuff. Yes, those stuff, just to complicate people. Okay, only to
Just
like
a
fancy
fancy
names,
name made
only
by
to get
Phantom.
people. Yeah, phantom growths. Okay, only to get people into their stuff. Change of character bullshit. Okay, so this is it. Okay, simply wait for a QM to form, a bullish QM to form. That's it. Okay, a bullish QM and inducement by below that pair. That's it. This is the only confirmation you need. Okay, that's the only confirmation you need inside of your point of interest. Okay, so yeah, let me show you a nice example. Yeah, let's say we were here. So now, what can we see as soon as we open the charts as smart money traders? We can see these maybe order blocks. Yeah, we can see order blocks, or as we can see imbalances. Okay, or else we can see these liquidity getting built up and all of that stuff, right? This is what we can see. But what can the retail traders see? By retail, I mean the ones that are using retail concepts. What can they see? As soon as they open the charts, they'll be like, oh, that's a trend line for me. See that? That's a nice trend line. Okay, that's a nice trend line. So what would they do? Okay, what would they do now? Imagine how many people would have wanted to buy it when price tapped into this trend line. Just think of it. Okay, and what would they do? Like, see, every single time price came into that line, rejected, came into that line, rejected without any reason. So, like, some people will be expecting for this to play out, and where will they place their stop loss? Below that low, right?
Yeah.
Below that low. This is what the trend line traders would do, below the previous low. Okay, so first thing we have trend line liquidity below that low. And then we have breakout traders, because why? If price breaks structure, if it retraces and gives you another breakout structure, the breakout traders are going to have their sell stops below that low. Okay, sell stops will be placed below that low. Okay, first thing we have trend line, we have breakout traders, and then we have smart money traders. See this order block?
Yeah.
Look at that order block, because what have people been taught about order blocks? If it breaks structure, I'm sorry, if it takes out liquidity, if it has an imbalance left, and if it breaks structure, it's going to be a high probable order block, right? That is what people have been taught. So everyone will be like, all of the spot money traders are going to do this.
Yes. Even I'm
Everyone will
taking
do
an
this.
entry there.
Yeah.
Even I'm also taking an entry there.
Yeah, that's the thing. Okay, so everyone would do this. Everyone would do this, and see, that's a 9 pip stop loss from the 4 hour time frame. So that's not bad, right? So everyone will be willing to do this. Okay, and then yeah, we have smart money, we have trend lines, we have breakout traders, and even supply and demand traders, right? A drop, a base, and a rally. Okay, a rally here and a base here and another rally here. Yeah. Okay, but the thing is, now look how the bullish candles started getting bigger and bigger after this move to the downside. Okay, see, with the imbalances and all of that. So supply and demand traders might call this a good demand zone, set their limits here, stop losses below that low. Now, if you go to a lower time frame, you could even see equal lows. See there? A double bottom. Okay, you can even see a double bottom. And this is most importantly, this right here was an unswept Asian session. See there? This is an unswept Asian session. Now, this is our time. Okay, now this is IST. Okay, this is when Asia starts. Now, yeah, this was on yeah, this was on September. So on November, the times were changed because of the daylight savings thing. Okay, like yeah, I think you know the session timings properly because this Asian session will be very important. Okay, Asia is pretty much the guide to an intraday trader. Okay, Asia shows you where the liquidity is. Asia shows you where the market wants to go. Okay, like do you know the importance of the Asian session? Yeah,
No, no, no. I haven't.
yeah. Now, okay, I'll show you. Now, always make sure you mark out the yeah.